Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris milling wheat and London UK feed wheat. I'll start with Paris milling wheat. It has been obvious here, as elsewhere in the grains, that the market had moved sideways to lower from early July until mid-August. The problem here, compared to the other grain markets, is that we've had two competing patterns vying for the market's attention. The first pattern was a July to September triangle come wedge pattern, pointing lower, enough to be considered a wedge but not completely out of the triangle class. This pattern saw a final break higher in late August. Then there's the second pattern, the late July to early September bear channel. This one looked better at the time, thus we've already seen the market reach the primary and secondary targets for the triangle, plus we also had the target reach for the bull channel and exceeded. In this whole process, the market here, as elsewhere, constructed a new pattern. In this case, a mid-August to date ascending wedge pattern, currently at 352 to 365. I have to say today, but this week prices have dropped out of this ascending wedge pattern, and whereas it was awkward with so many patterns before, this is where it starts to get difficult. You see, unlike the other grain markets that I've looked at, the long moving average here in Paris wheat is currently at 336 and was and is also today below, for the most part, current traded levels, and is right now acting as support. This is a unique situation in the grains. What was not unique is that we have had here the slowly rising short medium moving average supporting the market, and this leads us to the same situation we had in the other markets, the grain markets. There are now two avenues that I can see for this market, though there are no doubt more available that will make themselves known. The first is the straightforward move down with the potential targets for the ascending wedge pattern. I have of course removed the preempted topside targets in the meantime. Thus, a primary target X on the downside is in the 331 area, whilst the secondary harder to reach target X1 is way down in the 296 area. This leads to the second avenue. It is the possibility of the whole of the July to date action being not just a loose type of V bottom, but a loose type of V bottom with an extension. These extensions have something like a bull flag within them, and that is what may be being built since mid-August. Personally, it looks a little slack as a pattern, but if the short medium moving average manages to hold the market up as elsewhere it is seemingly trying to do, and we then see prices revert back up, well then this second scenario, the loose type of V bottom with an extension, that may or may not be a bull flag, well that suddenly looks a lot more interesting, however much it's complicated. London UK feed wheat. Since mid-July we've had one of two patterns constructed, either a shallowly bearish channel or a narrow but also shallowly descending broadening wedge pattern over the July to early September period. It depended on your point of view as you saw it. I prevaricate on which to choose, siding towards the bear channel idea before accepting the descending broadening wedge pattern. Interestingly, what's different here compared to the other grain markers is at once manifold and at the same time key to the future, though it does ultimately not detract from the commonality we've seen in the recent patterns elsewhere. For example, the long moving average, currently at 273, is in the wrong place by quite a distance compared to the other grain markets. Additionally, the market has gapped this week well below the short medium moving average, currently 273.5. So we cannot look at that as a catcher's glove, if you like, holding up the market. We have to look at something else to fulfill that function. Perhaps the 50% Fibonacci line, the July 2021 to May 22 move at 262.5. Well, that might fit the bill. However, one thing is for certain, and that is the market has broken down through the lower bull channel line. And that has now left us, as elsewhere in other grain markets, with two avenues that I can see, though know that there are more available that will make themselves known in due course. The first is the straightforward move down with potential targets for the break below the bull channel. Thus, a primary target on the downside has already been achieved in the 269 area, whilst the secondary harder to reach target X1 is way down below in the 239 area. This leads to the second avenue. It's a possibility for the whole of the July to date action being a possible V bottom, but with an extension, a possible V bottom with an extension. Now these extensions have something like a bull flag within them, And that is what may be being built since mid-August, though personally it looks like a very tired and sick version of one, a version of even a bullish halfway hesitation. So I would take a big pinch of salt with that as an idea here, but you never know. Anyway, just in case we see this 50% Fibonacci line hold up the market, and we don't see the prices revert back up, well, this second scenario, a possible V bottom with an extension that may or may not be a bull flag stroke bullish halfway hesitation, well then it suddenly looks a lot more interesting. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investors International Limited. And here comes the final bit.